when gold is going to be it's not going to be reinstated. It's just going to be unearthed. Like, oh, that's what we're sitting on. We're sitting on, a big triangle of gold. That's what we're on. With silver, it's a little bit of a special case, because with silver, that typically spikes to the historic monetary ratio of around 15-1 during monetary panics. When the dollar is no longer functioning, the dollar can no longer be exchanged for any amount of gold. Gold itself, physical gold, can't be very good for retail trade. If a gold derivative that divides gold, like a dollar bill, divides gold into now 2,653 pieces, right? If you don't have a functioning gold derivative, the only thing you can use is physical silver to divide gold.
Gold and silver have long been regarded as reliable stores of value, showing a consistent and steady increase in purchasing power over time. Unlike more volatile assets like stocks or real estate, these precious metals have demonstrated resilience and stability, making them an attractive choice for long-term wealth preservation. Financial analyst and precious metals expert Rafi Farber underscores the significant role of both gold and silver in maintaining purchasing power, pointing out their long-standing history of rising value, especially as alternative forms of money amidst economic uncertainty. In a recent interview, Rafi compares the stock market to gold and silver, emphasizing that the latter offers a more stable investment, particularly when evaluated over extended periods. For example, an analysis of gold's performance against the S&P 500 since 1971 shows comparable returns, with gold surpassing stock market performance during certain periods. This suggests that stock market gains may be misleading, particularly for those who lack the skill to select individual stocks effectively. For many investors, a more prudent strategy could involve regularly saving and investing in gold and silver rather than relying solely on equities or bonds. In many of their interviews, both Rafi Farber and Andy Schekman have consistently underscored the long-term value of silver as an investment. While its role in the global monetary system has diminished, silver remains an essential component of global financial markets. Currently trading above $31 per ounce, silver has maintained significant support levels, though it has underperformed relative to gold recently. Despite its extensive industrial use, both metals have benefited from central bank interest rate cuts, which have enhanced silver's appeal as an investment asset. The Federal Reserve's monetary easing policies have supported increased demand for gold and silver, as evidenced by the growing inflows into silver-backed exchange-traded funds, ETFs, highlighting silver's strengthened investment outlook. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
Gold and silver, their purchasing power is going to go up and up and up. If you look at a chart of silver versus other commodities, or gold versus other commodities, gold has been outperforming other commodities for 20, 30 years now. And it's going to keep going. That's what makes gold and silver a good money, is that it gradually rises in purchasing power over a very long period of time. Relative to stocks, I think gold and silver are going to go much, much higher, because we're still pretty pathetic in gold versus the S&P 500, for example. And I think that once that ratio really starts to turn and head higher, then people with a whole bunch of stocks in their portfolios are going to realize that they're not really making money, because versus gold, they're not really performing. And if you look at a chart of the Dow and the S&P versus gold since 1971, it's pretty even. I think gold's even outperforming. That itself proves that all stock market gains are basically an illusion. And unless you're a good stock picker, you may as well just have put a section of your salary away every month in gold and just bury it in your backyard, and you would have done. Yeah. Okay. So with silver,
reclaiming its role in the monetary system,
it has to, because I don't see it as reclaiming its role in the monetary system, because it always has. Even now, it has a role in the monetary system. It's still the base of the monetary system. It's just buried, right? But because of the Misesian regression principle, Mises was able to prove that all prices go back into the past, right? And therefore, everything is based on gold even today, because the dollar was born out of gold. It was born as a receipt for gold, and therefore all prices go back to when gold was traded for itself as a commodity. It's going to stay the base of the monetary system. It's just going to become unearthed, and people are going to realize what they're standing on. right? It's like when people figured out that that the sun revolved around the earth. It's not that, sorry, the earth revolved around the sun.
just,
Sorry.
wait a minute. Did I miss that?
Yeah.
I missed
Like
that in astronomy? I could have sworn it was the other way around.
When people found out that the earth revolved around the sun, it's not like all of a sudden the solar system changed. It's like we figured out where we're floating. So when gold is going to be it's not going to be reinstated. It's just going to be unearthed. Like, oh, that's what we're sitting on. We're sitting on, a big triangle of gold. That's what we're on. And with silver, that's a little bit of a special case, because with silver, that typically spikes to the historic monetary ratio of around 15-1 during monetary panics. When the dollar is no longer functioning, the dollar can no longer be exchanged for any amount of gold, then you can't buy anything with it. When you can't buy anything with dollars, you can't go into like a supermarket with a gold coin and say, give me a week's worth of groceries. You'll have to buy the whole store. So gold itself, physical gold, can't be very good for retail trade. If a gold derivative that divides gold, like a dollar bill, divides gold into now 2,653 pieces, right? If you don't have a functioning gold derivative, the only thing you can use is physical silver to divide gold. And so that's why the ratio goes to 15-1. So at the peak of the monetary panic, whenever it's going to be, there's going to be a window where silver to gold is 15-1. Or gold to silver is 15-1. During that time, you want to spend your silver on anything you can get your hands on, just to spread it around throughout the world, to give this base of basic money to the public so that they don't starve. And it'll make us very rich, and it'll also save the world. So stack silver, get your friends to stack silver. It's even more important than gold in my view. And the more people that have a base amount of silver, even $1,000, $2,000 worth per person is more than enough to save the world from the worst of the end game. Then do it. We're laying out like a silver, like like the firemen, people jumping out of buildings, and they put that trampoline down when you're jumping out of a burning building to save you. That's what we're doing, except with money. I can tell you basically, broad strokes, what's going to happen. What's going to be the result of that, I don't know, because you can either end up in a zombie apocalypse, or you can end up in a social catharsis where everyone says, let's go back to basics here. It's going to be a mix of things. I think it's going to be really bad in the big cities, the ones that are already falling apart, like San Francisco, Chicago, maybe New York City, big, huge cities in Asia. They're going to have a really tough time. People are going to be at each other's throats. You could end up with riots and a lot of death. I don't know. I think it's going to be a lot better in the rural areas. But whether we take the hyper deflationary or the hyperinflationary track to this, it's a circle. It leads to the same point, right? The end point is that people who think that they have money because they have a certain amount of dollars in an electronic account somewhere, they're going to wake up and either it's going to be gone, or they're going to wake up and it's not going to buy anything. Either way, it's the same thing. So when you have a financial collapse like that, it's not that you have a destruction of wealth. Nothing happens from one day to another after a bankruptcy. You could have some fighting and maybe some destruction of some property, but that's not inherently connected to it. So what happens is that the people, 99% of the world that has only paper assets, right, or a certain dollar amount in their bank accounts that's electronic, they have no purchasing power. All the purchasing power goes to the holders of raw money. So let's say on day X, you have all these people think that they can buy a certain amount of wealth in the world based on prices as they are today. And then on day X plus 1, 99% of those people can't buy anything. And the remaining 1% of people that have real money can buy the rest of the planet. That leads to a lot of social unrest and also a lot of responsibility on us. And the reason why, Miles Franklin and all these other gold retailers are so important is because we are the ones that are we're trying to build a monetary foundation for the planet, that the dollar gets tipped over, and then we want as few people as possible falling over into poverty and just having some amount of gold and silver where they can rebuild back. If they don't, they're going to have to work for it, and they're going to have to work for the people that do have gold and silver, and they might not want to do that, and it might be difficult to find them. So if we give as many people as possible even a little bit of gold and silver just to fall back on, once the dollar falls, we're going to have a lot easier time rebuilding society. This is not the first time where big globalist organizations put out environmental scare tactics to have people build a huge edifice of something that doesn't work and kill a bunch of people and don't care about it. Right? I'm talking about the UN or the WEF and their whole sustainability code for the world is about to end. There's climate change. We're causing it, so we have to have this whole global grand scheme that we're gonna lower fossil fuel output, carbon footprint. Right, we got to lower that to a certain amount, and carbon, whatever it is. Okay, and they give us these scare tactics, and they say, look, we're gonna save you. Don't worry about it. So this is not the first time this has happened. Actually, the Tower of Babel, that was the motivator. And I found this in the Midrash, in the rabbis, which is, it's compiled in about somewhere between 700 and 900 of the Common Era. So we're talking about 1300, 1400 years ago, quoting rabbis that were around 200, 300 of the Common Era. What they say is that the people, the generation of the flood, right? What was their motivation? Well, they had the flood, the generation of the tower. Sorry, this happened right after the flood. And whether you want to take these stories as historical is not the point. I'm not arguing whether they actually happen or not, or whether they're stories that are compiled. It doesn't matter. The point is that how they're interpreting the story, or how the rabbis are interpreting the story, is that these people, they were very united, right? There's a big globalist organization in Babylon building a tower. And what are they saying? They're saying a flood just happened. And the flood, if you calculate the years in the Bible, was 1,656 years after Adam is created. So they're saying, what are the people of Babylon saying, of Babel saying? They're saying, look, every 1,656 years, the sky falls, it opens up, and the rain comes down. So what do we got to do? We got to get everyone together. We got to build this huge tower and build supports for the world to keep the sky up. So we'll start in the east in Babylon. The other three groups will go on the other four corners of the earth, and we'll have this like huge thing that'll hold the sky up, and it will keep the world from flooding. Right? And what are the globalists saying now? They're like, oh, we have to get this huge program together. We got to stop the earth from flooding because we have climate change, and the sea levels are going to rise, and we're all going to die. And the other thing that they say is that in that society, they don't know anything about the World Economic Forum or anything. You have these people that are environmentalists. They want to save the planet. So they build two staircases on the tower. One goes up to bring bricks up. One goes down to bring bricks to bring the people down to bring more bricks up. They were putting a brick in place, and the brick fell. They would be in mourning. They would like scream and cry, and they're like, "Oh my God, what do we do? And this, how are we going to get another brick up here? It's so heavy." But when somebody would fall off of the top of the tower, they wouldn't care. They wouldn't give a crap, right? So, but it's the same thing. Like they don't care. They don't care about people. These globalist organizations don't care about anybody individually. It's just their globalist schemes that they're trying to build, and they care about the damn bricks.
In November 2024, the Federal Reserve Open Market Committee voted to cut interest rates by 25 basis points, marking the second reduction in 2 months and hinting at further rate cuts. This move was met with optimism in the markets, as evidenced by a stock rally and a drop in the 10-year Treasury yield. However, while the market's positive reaction is understandable, it may be premature. Federal Reserve Chairman Jerome Powell has consistently highlighted the challenges of balancing interest rate adjustments, stressing that reducing rates too gradually or too late could harm economic activity. Throughout the year, his position has shifted, initially focusing on keeping rates high and later expressing concerns about the pace of rate cuts. This underscores the difficulty of predicting the Fed's actions with certainty due to various economic factors. If the Federal Reserve continues to reduce short-term interest rates, we may be on the brink of a bond bear market, a significant shift from past trends. Financial analyst Rafi Farber notes that the most recent bond bear market between 1971 and 1980 was driven by the end of the gold standard and rising debt levels. Farber warns that higher interest rates could follow if a bond bear market develops, impacting the average American. For floating-rate mortgages, monthly payments may rise, while those with fixed-rate debt may be better insulated from the effects of higher rates.
Bond bear market. This would be the first time that we're in a bond bear market on a fiat money system, right? Yes, we were in a bond bear market, the tail end of one from 1971 to 1980, but at that point we had just gotten onto a fiat standard. or a nothing standard. And we were only beginning to accumulate a huge amount of debt. So at that point, then Federal Reserve Chair Volcker could still afford to jack interest rates up to about 20%, and in that way incentivize people to actually buy the debt and earn money on that debt. And that's what happened. The debt was small enough to handle it at the beginning of the fiat system. If this bond bear market is happening at the end of the life of a fiat system, and fiat systems do not last more than 50 years usually, they always end up exploding or imploding, whichever way they want to plode. So for the average American, I'd say if we're headed into a bond bear market at the end of a fiat system, you want to make sure that you have some real money on you for whatever happens. We've said that before, but if you want more specific advice, I bought my house in 2018, thank God. And we locked in an interest rate at the lows, at the all-time lows. 2018, not very all-time lows, but close enough to it before any of these hikes happen. So I'm busy paying like an almost nothing mortgage every month, and it doesn't really hurt. It doesn't really hit me that hard. Meanwhile, everyone else who had these floating rate mortgages that now their monthly payments are going up and up and up every month because of these interest rate hikes. Even at these rates, right? Lock it in if you can afford it, because interest rates are going to head a lot higher even than this. I remember in 1980 they headed up to 21%, and as the dollar unravels, those interest rates are going to head higher and higher still, and then the dollar is going to completely implode. You could argue from there that at that point the bank isn't going to be able to collect their mortgage at all. But that's I'm not going to advise playing chicken with the system to that degree. So whatever you can lock in at rates, if you can lock in flat rate debt and you can afford it, I'd say do it. If there's something you really want or you need in your life. Other than that, make sure you have enough money, make sure you have real assets, and make sure you have a community of like-minded thinkers with people with skills, and you stay away generally from the purple-haired crazies who are in mourning over Trump and they can't get over them, and they're if they're men who think they have periods, just don't go near them. There's a lot of ways that I can address this. I'm going to try to drill your question down to what I'm sensing might be the fear behind it. I'm not saying your personal fear, but whatever you're trying to reflect in that question is coming from a lot of angles. There might be a faction of the government that wants the reset to happen. I was listening to Matt Taibbi's podcast, America This Week, a few days ago. I think his name is Walter Kern. He was saying he had this sense or this feeling that whatever intelligence agencies were, messing around with stuff, and let's not be too specific here because I don't want to get flagged. Whatever intelligence agencies were messing around with voting machines, he felt that they were kind of easing off this time and letting the chips fall where they may. And just a lot, because I think they saw that if they messed with it too much, there'd be some kind of a civil war or something like that. And nothing like that happened. So it could be that whoever is really pulling the strings in the government is letting the reset happen. But to the bigger point is, don't fear the reset, right? The reset's it's our friend. It's a good thing. If you look at any famous story of villain and hero, right, where there's an evil force that wants to take over the planet. Towards the end of the book, they get really, really close, and arguably they even take over the planet for a certain amount of time. You could take Harry Potter and Voldemort, for example, and at the end of towards the end of Harry Potter, the final Harry Potter book, Voldemort has basically control of everything, and the only one fighting him are Harry's little group of friends, right? And then at the very end, when Voldemort thinks he has the entire planet in his hands, he recognizes that actually he's got nothing, right? So, but it's the same hero and villain story in any great work of literature, and there's a reason for this, because that's how evil operates. It takes over more and more and more and more until it has everything, and then once it has everything, it has nothing, because once you have everything, nobody produces anything, and then everything turns to hell, turns to crap, and then you start over from there. But that's also the basic message of the Tower of Babel, going back to what we were talking about in the beginning. They control everything. They have this huge tower. It's the biggest thing in the world. And then all of a sudden, it's done. That's it. It's over. So it could be that whatever bad faction or in the government or the deep state or the global government, whatever you imagine it might be, if they're letting this happen. If they let it happen, it's not going to be to their benefit. The reset is going to reset everything. It's going to reset wealth into the hands of stackers, which is perfect for libertarians and the world, because we want libertarian or libertarian-minded people to be in charge of the world. And the fact that they're going to have the money, it's going to be a great reset. It's going to be a renaissance. It's just going to be hard to get through it. And now that I think we can get through it, not with our hands at each other's throats, and maybe with some semblance of, okay, let's calm down and get through this together, I see a great future for the world, and I can't wait for the damn reset.
Gold and silver are expected to experience significant growth in 2025, with silver particularly seen as the most attractive investment option. According to the London Bullion Market Association, LBMA conference, while gold prices are predicted to continue reaching record highs over the next year, silver is forecast to outperform other precious metals. The LBMA's annual dealer survey revealed that 45% of participants believe silver will be the best performing precious metal in 2025, while 37% expect gold to remain the most attractive. The price of gold is projected to reach $2,941.40 per ounce by the same time next year, reflecting a 10.5% increase from its current market value. The LBMA's forecast for silver shows an expected rise to $45 per ounce, marking a 43% increase compared to its current price. This strong upward trend in silver prices makes it a promising investment for the upcoming year, with many dealers optimistic about its future performance. Share your thoughts on Rafi's analysis in the comment section below. If you found this message compelling, be sure to give it a thumbs up, share it with others, subscribe to our channel, and turn on post notifications for more thought-provoking content. Thanks for watching.